Hello and welcome to Africa Face to Face. I'm Lanre Akinola.
And I'm Sanjeev Gupta.
And on the show today, we have Saif Malik, the CEO of Standard Chartered Bank UK. Saif, welcome to the show.
Thank you. Very happy to be here.
Hi, Saif. How are you doing?
Good to see my good friends, and I'm excited to be on the show for today.
You know, Saif likes to be known as a safe banker. You know that.
I'm glad you got my notes before this session.
Contradiction in terms, right? Saif, I was just looking at this whole Stand Chart strategy over the last few years, and the word that comes to my mind is retreat. The bank seems to be retreating from the African continent. So I was telling, half jokingly, but half seriously to Landry, that should we at all have you on this event? Because you seem to be withdrawing from Africa. What's going on?
So I think you know very well that I'm actually born in Zambia, right?
Yes.
I joined Standard Chartered Bank in Tanzania, and I've lived in Tanzania and in Nigeria running our business, and I've been based in Joburg running the region. So I think I know Africa a little well, especially from a Standard Chartered Bank's perspective. We've been on that continent for 170 years.
Yes.
I don't think we are going anywhere. I think what we've seen over the last few years is how we are managing and reallocating our resources. We are still operating in some of the most exciting markets in Africa: Nigeria, Ghana, Kenya, South Africa. And in fact, last year alone,
but you pulled out of Cameroon, Angola, Tanzania. You pulled out of what other banks? Sierra Leone, Gambia.
So that was again coming back to us reallocating where we thought the resources would be best used, what our clients wanted.
Explain.
As an international bank.
What do you mean resources?
As a large international bank, we connect capital to where our clients need it.
Sure.
Like I said, last year alone, we facilitated $10 billion worth of capital flows into Africa. So when an African client wants to invest in Asia or in the Middle East, or a large global institutional investor from Europe or America wants to come and invest in Africa, they come to us. We are sitting on that crossroads of connecting, being that connector bank, putting the two together and helping facilitate
that. So you
that.
see yourselves positioning more for Africa to the rest of the world and the rest of the world to Africa kind of transaction? Is that what you're positioning?
Yes, as a connector bank, that's what we do.
So, Landry, what does that mean for the local banks then?
What I'm hearing from you is that, you know, the sort of restructuring and repositioning of a bank like Standard Chartered, it's not a commentary on Africa per se.
Yeah.
Because, you know, what we're about here very much is sort of trying to get the Africa story out there and make the case that actually, you know what, Africa is a good place to do business. So when people hear that, oh, you might be pulling out of some markets, that isn't saying we don't like Africa. Is that correct?
Absolutely. I mean, as I started off by saying, I don't think there's a bigger supporter for the Africa business sitting in London or wherever else in Standard Chartered than I would be one of them.
But would it be fair to say you want to pull out of the retail space?
No, I think the retail space is a space that we've seen that the large regional African players know very well. And we respect that.
Yeah,
and that's a market that has to have depth. It has to have connectivity in terms of branch networks and things like that. And we've seen that that's not a skill set that we want to compete with at the moment. So what we're saying is that where is our strength as an international bank, bringing that capital flow, and in terms of what is the gaps that we have, infrastructure gaps, trade finance gaps. So we feel that this is the strong suit that we can bring into the market.
But is the bank able to, given all the rules around capital charges and what have you, put a lot of its own balance sheet behind African deals? Or do you see yourselves more as a mobilizer?
We play both roles. As a bank, just to be able to put balance sheet doesn't mean that you're doing anything great. It's about being able to facilitate. It's about working with institutional players, about helping to drive capital in to scale up. So we play that role of mobilizing, we play the role of funding, and we play the role of distributing. I mean, that's what a modern global international bank does today.
And you're getting collaboration from the African banks?
Absolutely. We are one of the key partners for all the large institutional African players today. We have relationships with many of them, and we continue to grow that.
And what does this mean in terms of today's, and it's been happening for the last few years, the whole sort of shift in geopolitics, right? New friendships, new alliances. old alliances being questioned. What is Africa's positioning going to be or should be, you think, in this?
Safe, before you answer, and I want to sort of just add to that a little bit, because this for us, this is one of the key themes that we look at, right? And we know that the world is changing, right? Depending on how you look at it, it might look good, or it might look bad. Our take is that from an African standpoint, what you're seeing is there's more flexibility, there are more options, there are more sort of opportunities for partnership. What's your take on this whole question of global change geopolitically, economically, financially, vis-a-vis Africa? Is it an opportunity? Is it a risk? How does the continent fit into this?
So this is not a new story. I think Africa being at the crossroads of all this global change has always been there.
Or crosshair.
Yeah, and we've it's Africa's time. It's this, it's that, whatever. I think the continent is gifted with a few things. One, we know we all talk about is resources. Of course, we all know that. But what about a young, vibrant population that's growing up, right? In sub-Saharan Africa, with a billion population, you have numbers that are from anywhere to 30, 40, 50% is your sort of your young age, between 20 to 30 to 35. Okay, this is the population that's going to drive this continent to the next, into the next generation. What about that? What about the digitization that we're seeing in many of these markets, be it in, on the streets of Lagos, in innovation hubs in Nairobi, centers in South Africa? And I think this is where the African continent has to be able to sort of grab these opportunities. One is, I think, the Africa Free Trade Zone that was created a few years back. It's taken a little bit of time to get there, but it is the right vision, it's the right approach. I think intra-Africa trade is critical to start creating that your own market and start creating your own ecosystem around there. Supply chain finance, to try and say, how do we become a bit more self-sufficient around supply chain? So I think, those are the opportunities. And then, of course, there's going to be challenges. There's always challenges.
What's the biggest challenge? Infrastructure?
I mean, I think infrastructure gap, like many other places in the world.
Payment mechanisms?
Look at in Asia.
Yeah.
Many of those countries have infrastructure challenges. Payment mechanisms. It can be a challenge, but I think it's a huge opportunity, because you jump from technology and you can go straight into, can you go into stable coins? Can you go into other digital asset platforms that are being created that are on real time, cost of use is very, very low. So I think the African continent has that ability. That's why when the cell phone revolution happened, we saw an explosion in Africa, because we went straight into 3G, 4G, 5G without having a huge analog platform to pull us back, like we saw in some of the other places. So I think, I like to look at it to say, we can sit here and we can talk about all the thousands of challenges there are, but if we are going to grab it, then what is it that we're going to do? And I think the right rails have been put in place. It's just about pushing and having that will to get it done and to move forward.
Look, I totally share the sentiment. What makes you think, or gives you the confidence that sort of this cycle of optimism and opportunity is a bit different from what we've seen before? Because we've had,
if indeed it is,
we've had some, if indeed it is, right? We've had some hype cycles, and we all remember the Africa Rising, period.
The resurgent Africa,
right?
Yeah.
I mean, there was a sense back then, like, this is it, and it kind of went quiet, and now here we are again. Is there a sense that this time is different, and what's different about where we are now?
Well, I mean, I can't answer that question specifically. I think the issue right now is that it's in terms of where we are right now, in terms of what can we do and what powers do we have to drive that forward. I think the critical mineral element clearly is a huge opportunity for the African continent, because with everything that we see and we hear,
opportunity from a leveraging point of view,
from a leveraging point of view, from a perspective, where many African governments are now saying that instead of mining the mineral and taking it away, we want you to value add in country. We want you to bring more revenue.
Do you think
and things
Africa
like
has
that.
the bargaining position to do
Well,
that?
I think at some point, if you see the protectionism mechanisms that is happening elsewhere in the world, especially around these critical elements like the minerals and that, where countries are saying, we're not going to allow you to leave our borders, etc., etc. I think Africa has that leverage. I think they have to be able to rise that. I think we have to see good leadership. And we're seeing some examples of that. And I think we know the continent has to also, the Africa's value is operating as one. Now, it's easier said than done.
But Saif, this reminds me that because there are not too many global banks, I think we can safely agree that understands Africa because of the long years of association with Africa. So, for me, as an Africa practitioner, I was quietly disappointed with the very proactive and aggressive stance Standard Chartered took about moving away from financing oil and gas and fossil fuel. I mean, a lot of the African economies still have to harvest that natural resource. The world needs oil and gas, we all know that. So, why did you guys take such a rapid fire decision on something that is so integrally linked to Africa's development and prosperity?
I I don't think we've taken that decision.
Haven't you?
No,
Bec-
we're still very much a key player, in many of these sectors. In terms of what we're saying, that we are working with our clients to see what is their net zero plans, what is it from a ESG perspective in terms of what they're doing to drive that forward. We are working very closely to be a force for good in the space, but we understand that in a continent like Africa, you can't expect to switch off the lights that is generated one night from fossil fuels, wake up the next morning and everything's renewable. We understand that.
So, would you finance oil and gas?
We've said that gas is a critical
Bridge to
bridge to go from sort of full
coal,
fossil
oil.
fuel to renewable. So we realize that that's there, and therefore looking at key projects around gas projects and things like that. Again, working with our sustainable finance teams to ensure that it fits in within the overall client requirement
So-
and the country rules and regulations.
So you're approaching it with some pragmatism, right?
Absolutely.
So it's not
And
a binary
what we're
equation.
saying, sustainable finance is a key business for us. We're going to make $1 billion globally from sustainable finance, and it's in these markets that we operate: Africa, Asia, Middle East. That is the most need. That's the most needed. That's there. And so we are working with many of our clients. We're working with many of the national oil companies in the big markets in Africa to help them to drive that agenda of theirs, and to say that how do you move away? We know we cannot change it overnight. So we have to be a force for good to say, as an institution that's going to provide financing, how are we helping you to get to your net zero
The right
targets
outcomes, yeah.
and to get the right outcomes for the country and for the people?
Look, I think it's the right approach. Look, we have to take a quick break. We'll pick up the conversation afterwards. That's it for the first half. We'll be back in a couple of minutes. Welcome back to the show. We're talking to Saif Malik, CEO of Standard Chartered Bank UK. Saif, before the break, we were talking about energy. I'd like to get into another sort of big topic that's discussed a lot around Africa, which is the relationship that the continent has with the global financial system. There's a lot of criticism from African governments, from business people on the continent, say that, we're unfairly discriminated against. We get bad deals. Our credit ratings are sort of unjustly lower than they should be. Our borrowing costs are unjustly higher than they should be. And there's a push now, and the AFDB is pushing for this to say, we need a new financing pact with the world, and the world needs a new financing pact with Africa. Do you agree that Africa is unfairly treated by global finance? And if so, what can be done about it?
So I think the AFDB, the new president, is pushing that. I think it's a great agenda to push. I think it's important to bring that to the forefront. Do I agree that it's unfair? I think it is, and that's why banks like us, international banks, we come in there and we work with these governments. We advise them whether they are going into the capital markets, working with rating agencies. We have a full rating agencies team that helps them to address some of these issues, so that structurally
That is true.
we can manage that, right? So it's difficult. The pie that we have in Africa that we bring out is very small, and it's difficult to compete against other measures or other pipeline that's out there. But I think we ensure we try and push that forward. And then in terms of what can be done about it, it's really global finance on one hand likes continuity, but also global finance sometimes has a short memory, and they won't go. It wants liquidity wants to go where there's good returns and there's ability to get money out and things like that. So stability, and I think stability is very, very important. When you have foreign exchange coming in, going into your capital markets or into your bond payments, they want the same way that it comes in, it should be able to go out. And those are structural things that have to be resolved.
Is it safe to say that it's nothing personal? Because sometimes the narrative suggests that like we're being picked on here.
Yeah, but just to latch on to that, Saif, because what we see as a trend on the continent, where increasingly we see genuine domestic capital formation, right? Whether it's through the pension fund, life funds, banking, liquidity, etc. In your experience of having done a lot of work in the debt capital market side for issuances out of Africa, are you seeing this to be a big boon coming? Clearly, there is money that is looking to invest in debt issuances from Africa. In the past, it wasn't the case. So, my question to you is, do you agree that this is a very welcome trend? And do you think that that is ultimately going to lead to better price discovery?
So I think if you look at these local pension funds and provident funds, they have local currency. So if they want to,
True.
if they want to invest, they are sometimes regulated by their own regulations that they can't invest abroad. They have to, they have to convert and things like that. So a lot of that is done in country. So yes, that the liquidity is there. But for them to be able to intra Africa, I think there has to be some structural programs that have to be put in place that should allow the free movement of those, of that capital to be able to do that.
So there should be more
There
harmonization.
should be harmonization of that because all these pension funds that you talk about, African pension funds, are all local currency.
They're restricted.
Whether it's in Kenya or in Zambia or in Nigeria. Yeah. And they're restricted in terms of what they can do. Now, you have your development institutions, so AFDB, AfriExim, AFC, they play a very critical role in Africa. In my opinion, they are driving capital and they are catalysts for capital and they're catalysts for growth, but they alone cannot do this, right? We know there's a, what is it, 100 billion trade gap, whatever the number is. You can make it a $1 trillion trade gap. The reality is that the development institutions have to work with the private sector and we have to be able to drive. So the development institutions have to come in and they have to be able to drive capital in, so to bring us in on the private sector, and then we have to find a way to scale up, and that's the real critical
and you
thing.
see them de-risking.
Yeah, I think they do. I think where it becomes challenging is that where they want to go and do loans directly to clients and things like that, then they're competing with what is our bread and butter, right? I think a development institution has to come in. The catalytic part of it has to be the most important. Is that how do you explode, scale up, and to get more capital in? How do you get the infrastructure projects going and things like that? So last year, or in the last 2 years, we've helped facilitate nearly $6.5 billion of infrastructure projects. So that's a positive sign.
So you see
that's how you can drive
African
that growth.
DFIs play the role of de-risking projects, right?
To a large extent, yes. Yes.
That's what you mean by
Yes,
catalytic
yes,
role, right?
yes.
Okay. But Larry, you were earlier on talking about the trade finance gap, and you mentioned it just now, and we also know about the infrastructure financing gap. The question I have for you is, these are two big areas of work, the trade financing gap and the infrastructure financing gap. Is there any particular interventions that the bank is planning around these themes? Or is it business as usual?
Yeah, and just to add to that point on the financing gap, it seems that year after year, the figure either stays the same or it seems to go up. Right. So this is one sort of oddity, if you want to call it that. So why are we always talking about the same figure? Is nothing happening, or what's the story?
No, I think you have to understand is that the world doesn't stay static, right? It's evolving. So the pot keeps getting bigger. I think what's happening is that maybe the share is getting smaller, but the pot keeps getting bigger because there's more requirements that are needed and things like that. So I agree with you. The numbers are the numbers, okay? So for me, I can't sit here and give you a solution for how do we close $100 billion gap.
Fair.
What are we doing to helping drive that, to scale that, right? So we have, a trade facility, a great trade risk sharing facility with British International Investment, BII, a great UK institution that has helped driving development finance, is catalytic in nature, but also helps de-risk,
And
but also
long-term.
helps long-term and drives growth. So in Africa and South Asia. So for us, it's about, how do we get those facilities in place where it's 100 million or 200 million, and then how do you then scale up on that, So that's one aspect. You have other aspects that we see with the likes of MIGA and a couple of other institutions where they give guarantees. So this is more,
Credit enhancements and stuff,
and this then, that $1 of guarantee can actually create $4 of liquidity or financing, right? And so I think these are the areas that we all have to come together, and that's why one cannot play off the other. It's complementary. It's very
No, I
very
agree,
complementary. And this is coming back to my earlier point about what can regional banks, African banks, international banks do. For me, that's really important. Is that we are complementary to each other's. We bring an international network, And the large, really good regional banks that are coming up, whether it's in Nigeria, South Africa, Kenya, are coming and bringing really good understanding of the markets that they operate in,
Yeah,
and
Let- let me-
innovation and digital banking.
We're running out of time.
No, no.
I want to ask one quick question.
yeah, we still got like 5 or 6 minutes, so
Okay,
we're good.
one quick question before
You
we
should
forget.
increase the
Before we
segment
forget.
size then.
Yeah.
Okay, we'll have you again.
Yeah.
Saif, I have to ask this question.
Okay,
I know
okay.
it's slightly
No, but I also have to ask my question.
Hey,
so,
sure. Is you mentioned that you were born in Zambia.
Yeah.
You started your career in Africa. In many ways, you are perhaps, arguably, one of Africa's most famous banking sons, right?
I don't know
You are.
about that.
I mean,
That might get me in trouble.
he got awarded something from the city of London. He got a key so he can open the locks to
Okay,
to the city
okay.
of London. Anyway, jokes apart. On a serious note, what's your advice to African youth about
Yeah.
building global careers,
Yeah.
given your own journey?
Yeah. Since Landre has a very pressing question, I'll be very quick. I think, really, for me, it's about not forgetting. I having career aspiration, long term goals very important, but never forget where you come from, because what's behind you will always shape where you're going. And so for me, I've never ever forgotten, where I come from. So my grandfather emigrated from India into, eventually to Zambia. My dad, not even 50 years ago, his first job was putting coal in the train as a shunter. Yeah. When he was, I don't know, 15 or 16, so he couldn't go to school. And so when I sit here today, one, I feel very blessed. Number two is that Standard Chartered Bank has given this fantastic platform to be able to grow and develop. So it's really around hard work, humility, and it's about giving back. Because for every time I did something right, I promise you there were 3, 4, 5 people that were helping, supporting me, starting with my parents, my wife, my family, but then at at the bank also, whether it's mentors or sponsors. So it's always about giving back, and I think that's really, really
So
important.
how
I
did
mean,
you
that's
become
my
so
short.
charming and erudite, Saif? In which part of your journey did
Okay,
you become
Landre,
one?
Let's
Landre,
let's
your
look,
turn now.
look. I mean, it's I think very important words, and sort of quite compelling to hear. But I want to bring it back to something a bit more mundane, if you don't mind. You made this point about local, regional, global banks, and to some extent bringing it back to this question of global finance. What's the role of sort of new players that are coming in terms of the world of global finance? Now, places like the Gulf region are becoming important in terms of financial centers. You have things like the New Development Bank emerging. There's talk about building alternative structures. How does that fit into the picture from your perspective when it comes to things like, hey, how do we close the trade finance gap, et cetera, et cetera?
I think it's critical. Again, the pie is getting bigger. The trough is getting bigger. Why should one person, institution feel like they can do it all? I think that working together, and that's why I'm saying, coming back, Africa's strength is in unity.
Is Africa's strength in unity or potential strength is in unity?
No, potential strength, but also
Yeah.
strength. I mean, it's going to come to that. Each individual country, of course, can flex their own muscles and they can be very strong. But putting that together, can you imagine if we get the Africa Free Trade Zone to start working seamlessly? Even if we start off
Yeah, I agree
from
with
the
that.
trade side and then move on to the other parts. I think new players. I think the investments, and we are seeing some really good investments coming from Middle East into infrastructure projects. We've seen some investments in the past that have come in that have helped build infrastructure. And yes, we can talk all day about whether that's right or wrong, but getting a rail line or a new airport in the past would have been a pipe dream, but getting that infrastructure in place opens up these
And it's
countries,
happening.
right? And it's happening. It's happening every day. So for me, new players coming in are absolutely critical, and that's why to close off, a bank like ours, yes, headlines may say one thing. We still operate in 10 markets in Africa. We still see it as a very clear part of our international network and strategy. It is still a big part where we pick talent, we put them into the network, and more importantly, Africa still provides that opportunity that we think that can bring, especially around innovation. This new generation that's coming up, and around payment platforms and things like that. Africa can be the area that we can really try and scale those up. So for us, we still see the continent as a big role to play, and we'll continue to be there.
Saif, I think you've perfectly summed it up.
What Saif is saying is Africa matters
Yeah.
to the bank. And what you also said is very important, Andre, that Africa matters to the world. It's up to us to create that collective bargaining position, right?
Absolutely. It can become one of the most compelling growth stories of
Yeah.
the 21st century if you put in, demographics, innovation, and all that in place. So it's the onus is on all of us to help drive that.
I see, for me, that's the key takeaway here.
Yeah.
The world isn't standing still.
Yeah.
It's evolving rapidly, but it's about, one, realizing the opportunity, and much more importantly, seizing it. I think that's the key point, right? It's no point talking endlessly about potential. Anyway, that's it for this episode of Face to Face. Thanks so much for watching. Saif, pleasure to
Thank
have
you,
you on the
Lauren.
show.
Thank you, Sajid.
Thank you, everybody.
Thanks.